All right, ladies and gentlemen, I hope you had a wonderful day. It was another day of all-time highs, making it 4 consecutive days in a row of setting a new one. At one point, we were almost 100 points higher than the previous all-time high. But now tomorrow, we have economic data that can move the markets, and we still have a couple of earnings. So I got the breakdown for you. We're going to go over all of that, and then I want to go over an option trade that we made today. We made the play on Netflix, and literally we got paid $10 to make $1,000. I didn't make $1,000. However, if this play is wrong, you walk away with a $10 profit. I know it's very confusing. I'm going to go over that and then share with you a play that I am looking for tomorrow that can hopefully do the exact same thing. So what I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down.
But right off the bat, I am so excited. You have no idea, because finally the data begins tomorrow. We had a little bit of data today, and it wasn't a good start. You had strong PMIs. If you go and look at the 30-year bond, the 10-year bond, it is literally where we gave up everything. The strong PMIs did not have a good reaction. The market reacted a little bit and then bounced back up. Then eventually we started selling off, but that wasn't good. Then right around here, there was a bad 5-year auction, which was the worst, I think, in about 2 years, I believe. So I got to double check that, but it wasn't a good start. We're going to have to see where this takes us in tomorrow. But now the data you will be getting tomorrow, 1 hour before the bell, it will be the GDP. And I was saying this at the beginning of the week, even though we have the PCE on Friday, I do think that the GDP will be more important. Now, as far as what we are looking for, I do think a bad GDP will be very good for the bond market. The bond market's been selling off, and you've been seeing it. It's been hovering around 425, a little bit below that before everybody started going back on the rate cut expectations. The 10-year was below 4%. So if we get a bad GDP and that shows some of the data is deteriorating faster than people were expecting, that will help the bonds. As far as what it's going to do for the market, that'll be hard to say, especially considering that for the most part, we're kind of reacting positively to earnings as of right now. So as far as a bad GDP goes, it will be good for the bonds. What it does for the market, we're going to have to wait and see. However, if we get a good GDP and it comes in like the last time we had the GDP, it's above 4% GDP, showing crazy growth. All the Fed speakers are like, it's so good. I've never seen this before. Okay, we don't know why it's not that good. It's good, bad. Anything of that nature, it's probably going to kill the bonds, send the 10-year above 4.25, and that will not be good. But we'll talk about that when we get to the plays. But that's your first and main key. We finally have data tomorrow. There will still be earnings we are reacting to, both pre and post market. So we'll see where that takes us. But that GDP is definitely going to set the mood, especially when we've been getting a lot of mood setters in the morning, whether it's been foreign data or reacting to China stimulus. So that is key number one. Key number two, some of you might like this, some of you may not. The market is in la-la land right now. I hope you understand that. You are literally going almost 100 points above the next high. And this is kind of the difficulty, because until we know where the top is, we don't really know where support is at these levels. You're stopping at points, playing a little bit of stop and go, but I don't know how accurate or supportive these levels will be. But the market is doing its thing. It's hyped up on the earnings and the earnings in AI and things being better than expected, even in the midst of rate cut odds going backwards. But the fact of the matter is, we can stay here until Powell or until the set of really bad earnings. We need a big company, something like Google or Meta, having a really bad earnings that gets people starting to think about, hey, well, maybe the market is slowing down, or the data, the economy, not necessarily the market, is slowing down, and it starts bringing a bid to the bond. So a lot of people have been asking me, do you see any next big events on the horizon? I do think Japan and the Japanese yen, they're going to be a big thing to watch, but for the most part, the next big event, it is the same event that we have been talking about, and that is data shifting or the policy shifting, whichever one comes first. You either need the data like the GDP tomorrow to show a faster slowdown or a bigger run up, or you need Powell and the Fed and all those guys, even the Fed futures, to make a shift bigger than what we're seeing and changing some of the ideas that we have seen from the last Powell. So up until the next Powell, that's really what we're going to be at, and that's what brings me into my final key now. Powell is next week. We're still going to have big earnings, but I hope you understand this right now. Powell is the main event. Powell is the party, and earnings are still the pregame. So we'll see where this all takes us, where we get our support and resistance. We've got to deal with this week. A lot of movements on bonds in the dollar, but now let's see where we get with this data tomorrow. Then after that, we're going to have a couple of more earnings to digest, and before you know it, it is going to be Powell next Wednesday. So I hope you're ready, but now let us get into the plays. So, right off the bat, I got a couple of different plays, and I kind of hinted at this. We were talking about the GDP and what could happen tomorrow, and my first play related to that, it is going to be the bonds. I'm in a ZB, and I'm currently getting destroyed on it from 2 weeks ago. I went from positive to negative real quick on that one, but what I am looking for is that the 10-year and generally the whole bond curve, it is either going to top out around that 425 and start coming back, or it is really going to break down and break through the 4.5. This is what I was just talking about on the first key. I'll have to bring up the bond chart for you, and this will help you understand it a little bit because I do go back to this chart to show you the actual yield. Remember that 4.25? When we broke below it, we had to retest it and didn't get above, and then that's what started a lot of the downside. Anytime at 4.25, you've either got a little bit of resistance, came down, but when we've broken through it, literally 4.25 after September, that's what started that next leg of everything dying after the first little pullback from August and September. It's a very big rally, and you may have heard me say this before. If they're going to go to 4.25, it's going to go to 5.0. If you go to 5.0, it's going to go to 4.75. If it goes to 4.75, it's going to 5.0. Same thing applies to the downside. When we break below 4, people want to take it to 3.75. You break below 3.75, they're going to start thinking 3.5. That is how the bond market works. So now with data, even earnings, and coming into Powell, this 4.25 is going to be very crucial for how the bonds across the whole entire curve, even the rate hikes or the rate cut expectations, how they end up playing out. So this is what I'm going to be looking for tomorrow. If we really get some decisive GDP and economic data, I think this could be an interesting one, and I'm looking for either a big breakdown of the bonds, they hit 4.25, and then they start going even worse from there, or they hit 4.25 and say, nah, we don't belong here. This is not our home, and then they start coming back down. So that is play number one. Keep your eyes out for that. Then play number two. This is relating to that play that I was talking about, what we did on Netflix today. I am going to be looking for Tesla tomorrow. So I'll go to the next Netflix play, and then we'll come back to this, and you could see this is an earnings strategy. I've covered this many, many times, and today it ended up working out. We were talking about Netflix yesterday. There was a ton of upgrades on it, and it was looking very good, but in the first 2 minutes of the day, it was trading at $5.38, and that was still pretty expensive. So like you go and see it there, it's like pretty much the low of the pre-market and just above the high of the post-market yesterday. But what we ended up doing in the morning, it was like 2 minutes in, I said, hey, I don't want to FOMO too hard onto this. And like I said, I'm waiting to get the swing trade. I am waiting for this to get back into that $600 range. And I wanted to set a place marker for the next week out as we start working into Powell and the other earnings. And I wanted to throw one down. If you remember that Boeing play, we did good on it. We threw a place marker down. It ended ended up paying out pretty good there, but it did go down first. So I thought I was going to lose on this play, but what I ended up doing, I grabbed a Netflix next week $600 call for 75 cents. It was a little higher in the morning. It started to drop down. I said, all right, let's grab it. I even said it on stream. I thought I was going to end up losing on it, but a couple minutes later, it absolutely rocketed up, and that play shot up to like $200. We bought it for 75 cents. It started running up, and you'll see here, 4 minutes later, what did I do? I sold a call $10 further out of the money for $84. So if you're not understanding, I bought a call for $75 and then the stock moved up and then I shorted a further out the money call for 84 cents and got more money than what I paid for the call that was closer to the money. This is the ghetto spread. We have a video. If you search how I turned $500 into $40,000, that is the video. We have done this many times. I got a bunch of tutorials on this and it worked out very quickly within 4 minutes. And I said, hey, it was a place marker. I just wanted to see the prices. Maybe we got lucky. And then it started to run up. But I looked at the difference between the strike prices. What happened with this play? I got back $84, even though I spent $75 on this. That is a $9 difference. But if Netflix somehow goes to $610 by next week, I will make $1,000 on this play. If Netflix drops tomorrow, even by the end of the day it faded, no matter what, I cannot lose any money. We've been doing a lot of these small money plays to protect ourselves. This is the epitome of it. Why? Because no matter what, I don't lose any money. I'm walking away with $9, and then if it does work out, the market still wants to go crazy, we have a tremendous amount of upside. It's literally like tens of thousands of percent if it actually hits, just because our cost basis is nothing. So that's the second play I want to show you. That's what we did today. I am still holding that play, but now as that relates to Tesla, they had bad earnings, and I'm hoping to get a post-earnings play on Tesla tomorrow, whether it's a bounce or whether they continue to flush. That's what I'm going to be looking for the first couple of minutes, depending on where it's at. If we could get a good place marker at a certain level, I will be using the 2 standard deviations, because guess what? That play today, that was the 2 standard deviation from the day prior. I'm going to keep my eyes on that, because if that could end up working out in its favor, if we could get one of those quick early morning moves, everyone's going crazy, and quickly ghetto spread it, I would love to have another cheap or free play with a lot of upside, especially in an all-time high crazy market like we are in now. So that is play number 2. And then finally, play number 3, Intel. They got earnings tomorrow. This is the lagger of the big bunch of tech or semiconductors, and they still have a lot to prove there. They're not nowhere near their all-time highs. They may go higher. We'll see how it plays, but I'm really excited about these earnings. But the play that I got already, it has already ran up, and the pricing has changed. So I am simply just going to hold and ride this one through. So as far as the play, and oh my gosh, what's happening here? Boeing is getting the clapper after hours. Boeing MAX production expansion halted by the FAA, including the 737-9. So they're down another 2.8 right there. We'll see as that goes in tomorrow. If you got puts on it, you're probably going to end up liking that. So watch out for that one. But as far as the Intel play now, this one I made a couple of days ago. I think it was actually on Friday after the SMCI. We did cover this one on the watch list and on stream, but I went both ways. We did the pricing in at the moment. I did 2 standard deviations. I just shot a little bit early, and then in this case, the calls ended up going up. I bought these 2 of them for $45 a pop. They are now going for $90. They were even as high as $120, so that's almost 200%. They're holding up 100%, but unfortunately, the pricing moved with it. So even though at one point these $41 puts, these are the ones I got. I grabbed 4 of these for $25, so spent $90 on calls and then $100 on puts. If I just kept it 1 and 1 or 2 and 2, it would have been better off, but these are now further out the money. So like I'm saying, the pricing has adjusted because 2 standard deviations on the downside, it's a little bit lower considering the stock has almost moved up 10% in a short amount of time there. So unfortunately, if it plays to the call side, we will get a really good benefit off of those plays, but now those puts, it's leaving us a wider range and a wider chance of losing the profit on the calls and then not making any money on the puts. So we'll see how that all plays out tomorrow, but that is going to be my favorite play as far as every other play. Let me see what's up with Boeing. I'm probably going to end up playing that one tomorrow, or we'll see. Just it depends on the contract premiums. We'll see if that 2 standard deviations was priced in or not, but I did make a bunch of earnings plays again today. So we went through the whole entire list. I actually made 2 that were not related to Boeing, and I wanted to get in on some of the earnings hype. And just like Intel, I wanted to shoot a little bit early. And the first one I grabbed today, I grabbed one of these Meta. It was a 475 call for February 9th, so still accounts for 1 week after their earnings. I bought one of them, $57, and this one is well beyond 2 standard deviation. There's a lot more time on it. 2 standard deviations, I think, is like 460. I went a little bit further just so I didn't spend that much money, but if it does kind of grow into it, it will be good. But grab one of those for $50, and my reasoning is that Meta is approaching that $400 mark. Again, all-time highs already. A lot of companies have been breaking these solid levels, and they've been doing good. I was feeling kind of the same here, so depending on how the rest of the earnings went, I wanted to throw one of those out there. And then the next play that I ended up doing today, I grabbed a Disney play, I believe, and this was kind of the same logic, but not necessarily related to hitting a level. They are right below 100, but Netflix, they ended up doing good there. And the thing I liked about it is that Netflix was going crazy, and these Disney plays, they had a lot more premium yesterday. Even in the morning, they were going for almost like 50% higher. So I grabbed one of these for 53 cents. It was a 105 call for February 16th. It still accounts for their earnings. There is some premium if you do go look and come back to it. So it was trading at like 20 just like a week or two ago. That's the only issue there, but Disney has been hyped and then coming back down. But now with the Netflix, I'm hoping they could get a little bit of the juice, but kept that one small still. Those 2 plays are $100. And then we went into the earnings plays, and then I grabbed the IBM. I only went one way on this, and yesterday's plays, every single one of them ended up missing. So I ended up getting more plays the day before than I thought, but yesterday, every one of those plays missed. There was a couple that were break even, but here's the caveat to it. Some of the plays that I went one way, like Kimberly-Clark, even SAP, that was the one I really regretted. I got to show you that one. I went one way on these plays, but they ended up hitting for 2 standard deviations. So I think it was this one right here. I think if you went for the 180 calls, these were going for like 40. I spent $28 on the SAP. Even if you grab these at like $19, $18, they ended up going a couple of 100%, as high as $1 at one point. So where I failed on some of these, I didn't play both ways, but this isn't about, pick the direction. I want you guys to understand how the 2 standard deviations and reading the option chain is extremely powerful. So it ended up working in that case. Same thing with the Kimberly-Clark to the upside. So I kind of ended up doing it again. I went for the IBM. I went for the 160 puts today. I only went one way on $37, and then IBM was actually better than expected. They even talked about Watson and AI, not Watson AI. Where is it? It's not loading up here. I think if I go to IBM, or unless my platform wanted to crap out on me here. Yeah, they're still up. So they ended up going good, and now they're at 8%. This one would have ended up hitting there. It was priced in normally, but I assume their conference call ended up doing good. If I went the other direction, the numbers we called out pre-market, those 190s, I'm sure those would have ended up being pretty fire. So watch out for that play tomorrow. We'll see. I don't think the put is going to hit. As far as the other plays, the ones I made afterwards on that, let me see. I'll link them up here. I did try to get a little cheap play on the service nows, ended up not hitting, and then we did LVS, Las Vegas Sands, and this one could be pretty interesting tomorrow because they ended up doing good. We went both ways. I ended up grabbing the 55 call for 28 cents, and then we grabbed the 45.50 put for 28 cents, so about like $50, $60 there, but LVS ended up moving. I don't know where they are after hours right now. Let's see. They're at 51.20, so getting close, but it's still moving within what was priced in, so we do need it to go up a little bit more there. And then the final play that I did, or I did 2 more, we did UNP. That one's going to be for tomorrow morning. I did the 260 call for $40, and then I did the 225 put for $35, so $75 both ways. That one could be a big mover, and the thing why I liked UNP, it's a $260 stock or $220 or something like that, and you got to play both ways for $70. We saw a lot of higher price names today. None of them were that cheap, so I'm actually kind of excited about that one, but we'll see if it's. And then the final one, I grabbed the STXs both ways. I grabbed a 101 call for 37 and then a 77 put for 23, and they missed, even though it was like better and good at the same time. This one is going to rely on open, but if it doesn't move, we will end up losing the 70. So our only hope is UNP, maybe the LVS if it goes crazy, and then again, another L by not going both ways. But congrats if you took the IBM. But those are the only plays. That's everything else. Tomorrow should be exciting. Friday, Junior. Let's get the data, see what happens, and we still got a lot more earnings, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, do not be intimidated, baby. The way you develop your character is lack of intimidation. You too scared to take the next step? Then the character don't develop, baby. Keep that in mind. But Chad, I love you. Drink that water. Stay hydrated. Stay healthy. I'll see you in the morning. Let's have a good day. And horn.